All right, folks. Hello and welcome to the Internet Capital Markets podcast. We have with us Badi Sudhakaran, co-founder of Valr, which is the biggest crypto exchange in South Africa. Thank you, Buddy, for joining us today.
Thanks for having me.
Yeah, and as people can probably guess, Buddy is Indian from India, has sort of studied at RV College, Bangalore, and through a very interesting series of events, found himself as co-founder of the biggest exchange in South Africa. I think it's going to be a fun story. I've personally gotten to know Buddy over the last few weeks, and I think it's going to be a fun story to share with folks. I give everyone a quick introduction of what a centralized exchange is, what Valor is, right? So Valor is an exchange that was founded 7 years ago in 2018. They had 1,000 customers on launch day. So it's a centralized exchange, which means it is launched in South Africa. So it lets people buy and sell cryptocurrency using fiat, right? So whatever local money you have in South Africa, you can buy very easily with just your email and your wallet or your net banking. You can just go and buy and trade crypto, right? Uh, since then on, they have gone on to raise over 50 million in funding from Pantera Capital and Coinbase Ventures. They processed over $10 billion in volume. They have over 1 million users now. I think they just had your 7 year anniversary recently. And you're now licensed by the FSCA and CSP, which are the South African regulators, right? So it's already been like a success story over the last 7 years for Valor. You're now going to new markets and launching new product lines. So to kick us off, I think an exchange, in my view, is probably the most boring part of your business, right? It is the most successful part. It is the part you had to start off with back in 2018. But now, and I'm curious to know if you agree with this, but it feels like there is a transition that you can achieve from being an exchange to a crypto company, right? Where you have various new product lines, payments, business services, cards, lending. So I sort of want to throw it open to you with that context in mind that you've achieved all of this success as an exchange. How do you think about the next phase of Valor as the crypto company?
Yeah, thanks for that introduction and great question to kick us off. Um, the most boring part of the business is the exchange. That's an interesting statement. When you think about all of the things that we're building at Valor, everything started with the exchange because at the core of what humans are doing in terms of transaction, you are exchanging, right? So you're giving something in exchange for something else. So at the beginning of the journey of Valor, really what we set out to do is build the most affordable, the best exchange in South Africa, because at the time there was a monopoly in the market with 90% of the market share monopolized by one player that was only selling Bitcoin with very high fees. So you can call us foolish, but we said, okay, we're going to take this on. So four of us got together and we said, okay, what is the first problem we're going to solve? So solve the problem of giving customers the choice of whatever they want to exchange um, at a very affordable price point. But at the same time, give them the choice of lots of assets. It's not just Bitcoin that you want to trade, but many different crypto assets. At the time in 2017, when we started, there was this hype of many different cryptocurrencies that were being launched. But at the time, Bitcoin was still the king of all the crypto assets. So, um, like you said, we started off with that. We launched, and within a year, we saw that people loved our product. People started building, plugging into our APIs, loved the mobile app that we had launched, loved the experience on the website. We started off, like you said, the first day we launched, we had 1,000 people on the waiting list. But within the first year, we had about 10,000 users, but doing a lot of trading. And we said, okay, we have to provide this customer base much more than what we are offering. And that's when we started thinking about payments. So crypto is definitely trying to solve multiple use cases. One is store of value. So you want to make sure that what you're earning and what you're saving is actually maintains its value over time. And it has definitely proven a very good asset for store of value. But is it a good use case for payments? May or may not be. I think a lot of people these days are using stable coins for paying for stuff. But at the time, in 2017, 2018, 2019, no one wanted to sell their Bitcoin for pizza. I mean, there was one guy who did sell 10,000 Bitcoin for some pizza, but these days Bitcoin's considered a store of value. But there are other cryptocurrencies, especially in the stable coins, you can use it for payments. So then we built Valr Pay on top of. We still are exchanging at the foundational level, but you're paying something in exchange for something else. So payments was a use case that we wanted to build, and we built that. And then there were a lot of institutions started onboarding with us for their own use cases. We built a world-class API, very fast and very well-documented, well-used API that many people wanted to plug in. Many institutions came on board. And then we started looking at Valr as more of an infrastructure crypto business where any business can build on a Valr's API. Then we started another line of business, which is OTC trading. And so it was still in the realm of exchanging. You think about payments, you think about exchange, you think about OTC, still in the realm of exchange. But then we started thinking about, okay, lots of customers already have assets on our platform. So why not let them generate yield on those assets? Just like in a bank account, you just have your rupees in your bank account just sitting idle. So just you might want to park it in a fixed deposit or some kind of yield-bearing asset. So I think then it made a logical sense to then extend our product offering to yield-bearing instruments like staking. And in crypto, a lot of cryptocurrencies inherently support that at a protocol level. So we were able to expose some of those assets. So if customers are holding that asset, they can easily generate 5 to 10% of yield on that asset. And then we also started building on the exchange product itself to offer leverage trading, which was, okay, you bring in 100 rupees of assets, but through leverage, you can trade 1,000 rupees or maybe even 2,000 rupees worth of trading. And that, as a result, we were able to build that engine and then build something called futures product, which is in the derivative space. Not many people might know what that is, but basically you are not trading the actual asset, but you're taking a view on the price of the assets, and you can make a profit whether the asset's going up in price or going down in price. Also with some form of leverage. So a lot of traders who are sophisticated, they use futures trading as to hedge their existing trade. So you're actually using that to protect your value. So that's another financial pillar where you also want to protect some of the exposure that you have. So we are, continually building on top of this core, very boring, like Aditya said, piece of foundation that we are able to provide all of these offerings. And now soon we will be offering a new product called Borrow. So again, you might have Bitcoin, but you don't want to sell Bitcoin or spend Bitcoin, but you can use that Bitcoin as a collateral and borrow a fiat currency or another cryptocurrency like a stable coin, and then use that to spend. But of course, there's some interest rate involved, which is on par with our lending product that we have. So overall, it's kind of a fully fledged financial ecosystem that you can get through Valr. So through our slow, gradual build of this over the 7 years, from 1,000 customers in the first day of registration being open to now, recently, I mean, just today I saw it was more than 1.3 million customers that we currently serve with these suite of products. And we're continually thinking of, okay, how do we serve our customers by providing more innovative products that usually only sophisticated traders had access to in the traditional sense, but in the crypto, it's more democratized.
Yeah, this is very cool. Okay, so you've basically described, I think, three different companies rolled into one, right? Because you're Valor the exchange, you're Valor the fintech with the APIs and the institutions that sort of plug in payments, and then you're Valor the bank because you're doing almost investment banking like function with OTC, which for the audience is over the counter, where the same way if you're a founder in a startup with illiquid shares, you go and find a buyer. If you're holding crypto tokens that don't have a market or you cannot sell on the market, you go find a buyer. Typically, your investment banker or your VC would do this for you. In this case, Valor is doing it. Yield, lending, borrowing, all of this is normally functions of a bank that you're playing as an exchange, right? So yeah, so at this point, this is where you say, okay, you're and you mentioned Valor as the infrastructure layer on top of which people and users can build and get more access, right? And the cool part is that this infrastructure has two elements to it, right? One is you've got the customers and their deposits, which is the hard part, right? It's really hard. It took you 7, 8 years to get to a point where you have now 1.3 million customers and all of these deposits. And then it's the technical and financial infrastructure that you build on top of it, right? And you mentioned reducing barriers for access, which is again I think what crypto is all about. Ultimately, it's like what someone can do with 250K in the US today using crypto. I think anybody with $1 anywhere in the world can basically do. But there's also then the exchange 2.0, right, which is like futures, leverage, going to more markets. And so how do you think about growth on these two distinct axes? Because one axis of growth is take the exchange, take it to every single country in the world, add more currency pairs or on off ramping, add more sophisticated trader features. Whereas the other is build out this broader company which does payments and fintech and all of these other things. Is there a trade-off in these two axes, or are you doing both? Are you doing one? How do you sort of prioritize that? How do you think about that?
You know, in the past 7 years, we have had to look in the mirror and say, what kind of company are we? Are we a retail focused business? Are we an institutional focused business? Is it for really sophisticated traders, or is it a novice customer who he's still learning the ropes when it comes to crypto? For the longest time, I think human ambition says you want to be everything, right? So you want to do everything for everyone. Um, so we set out with the goal to serve both a sophisticated trader base as well as the novice. So our goal has been pro trading for everyone. So we want to be pro traders. So like you might start as a novice trader, so which is fine. You get access to that using our simple buy and sell interface, simple onboarding, simple deposit, simple withdrawal, and all of those things. But if you are adventurous enough, you can get to that tab very easily and see how you want to foray into that kind of experience. But like any business, 80% of your volumes come from 20% of your customers, and I would say it's the same is true for us. So the sophisticated traders who trade a lot, who trade at size and trade regularly, are the ones that bring in the revenue for us. So we definitely don't want to say we are a retail focused customer, and then that is what we are doubling down on, because both have always been the two pillars that is carrying Valor forward. And at the same time, without the sophisticated traders, you'll get a really bad experience as a retail trader. And without the retail trader, so the sophisticators won't stick around, because there's not enough takers and liquidity and all of those things for them to actually trade effectively. So this is kind of the ecosystem of an exchange, and we have stuck to that, pro trading for everyone. So we have a BD arm where we're focused on getting institutions, getting them on board, getting them to use our APIs. Even some institutions coming and onboarding their own retail users So you would think this it's a layer of an institution that's sophisticated, but they themselves have 6 million customers who are retail, but they want to expose their 6 million customers to of some form of crypto assets and services that either use us as an infrastructure. So we are focused on that mission. We will never be saying, okay, we are fully going to be fully sophisticated. We're going to transform our app to be only people who know what they do can use it. So we will continue on that mission because they are very two essential pillars for our success of a crypto business.
I have a couple of questions from a traditional lens. When you talk about these traders who come to your platform, one, do you think a lot of people who do stock trading on a traditional on the stock market, um, they typically tend to use charts, and they do a lot of technical analysis. One, do you think similar technical analysis can be replicated onto trading in on cryptocurrencies as well? Do the principles remain the same? So, and the reason I ask this is that if you think there are people who are actually learning stock trading in India and do it on a full time basis, would you recommend these people should just come onto platforms like Valor and apply their learning from the traditional business onto this, and that just opens up another avenue for them to just make a lot more money or do something with it? Is the knowledge easily replicable? And then another question I'd want to come to is from a B2B business perspective, that's more around Valor Pay, but I'd want you to answer this first.
Yeah, absolutely transferable knowledge. Technical analysis. If there is something called crypto Twitter. So if you go on the X platform, uh, there's a bubble of of crypto traders talking about crypto, talking about the latest stuff, talking about whatever it is. There are a lot of traders who do technical analysis, draw nice pictures, lines and curves and things like that. I personally have tried to understand it. I'm not very good at it, so I wouldn't provide any advice on it. But there are a lot of traders who came from traditional stockbroking, traditional forex trading, who do technical analysis on TradingView and take a view on what trade they want to take, and it is completely transferable. And in fact, a lot of people in traditional love crypto because there is, like you said, there are avenues to make more profitable trades because of the volatility that's involved with in the crypto space. Because if you think about the stock index, both in the US and in India, for example, a 1 or 2% change would be used to be huge, right? But 1 or 2% is like a few minutes in the crypto space. But even the stock market is taking a turn now. Like 10-20% seems to be the case there as well. So I think it's definitely so. If some of your audience are technical analysis gurus, I would urge, and then they're focused only on the traditional market, I would urge them to consider some form of crypto trading with a minimal capital inflow, and then figure out their own experience and what they want to chart their path.
To this, I have a question to Aditya. Aditya, do you think if Indians who kind of link their bank accounts to a wallet and then start trading on a platform like Valor, does currently the Indian government have certain regulatory concerns around it where it probably doesn't make sense for people to do it from India and it may make sense for people to do it if they're in other geographies?
I think the biggest barrier for trading on Indian, and this is why a lot of the Indian exchanges have seen their volumes disappear, is that there's a 1% TDS on every transaction. There's a 30% on individual gains without any offsetting, right? What that means is that A, there's a withholding on every transaction you make, so any kind of transaction tax slows down the volume of transactions, right? But B, if you made 100 rupees on one token and lost 100 rupees on another token, you're still paying 30% on the 100 you made with no respite for what you lost. And I don't think that's the same in stocks, or I don't trade, but I don't think that's the case in any other asset class, right? So as of today, the treatment of crypto is sort of punitive in the sense that you're taxed to the maximum with no respite or relief at all. And I think that's why whatever activity is there in India is, I think it's moved. It's moved off Indian exchanges for sure. It's probably moved to P2P. It's moved to unlicensed exchanges. Hopefully that changes now with some tailwinds from the US, B with bigger players like Coinbase coming back and registering, maybe Valor coming back and registering. Players like CoinDCX in India have also pushed with pushed with the regulator a fair bit. So hopefully that should change in the next year, in the next maybe 12 months or 18 months. We can hope. I don't know anything, but that's my best guess.
I just want to add to that. India has had a very interesting love-hate relationship with crypto, right? So in 2016, 2017, India was buzzing with activity when it comes to crypto trading, and then there was a ban. Was Aditya? If correct me if I'm. Was it 2018? The ban?
Sounds about right. There was a ban. I think the RBI passed a ban for banks to provide banking services to crypto exchanges, which basically becomes like a de facto ban on the exchanges, is what I remember.
So I think regulators as a whole, not just in India, in the whole world, are looking at this asset class and thinking, okay, what is this? How do we understand it? How do we regulate it? How do we ring fence it? Whatever, whatever. And I think uh, with US embracing, the current administration embracing crypto in a very open fashion, things are starting to change. All the all regulators around the world are saying, okay, if the US is doing this, you also have to take a look at it seriously and make a plan for it.
So the fact that you started off in South Africa, I understand it's because you were living there. But apart from that, if you were to completely disassociate the fact that you are there, do you think the South African government and the infrastructure is also very pro crypto in some way, which allows you to run your business and also have B2B clients which are in South Africa? Or when you talk about B2B clients, it's more businesses that are already onto the crypto ecosystem which end up becoming your clients.
Hmm. Yes, Africa is a very interesting place to do business. Just like India is in its own regard, Africa is also in a very different way, a very interesting place to do business. South Africa has been the most uh, well balanced uh, region. I mean, in the whole of Africa. We have operated for 7 years. We have always talked to the regulators. Even before we started the whole business, we talked to the fintech unit of the regulator and say, "Hey, we're going to start this business. Do we need an approval? Do we need a license, etc., etc.?" And there's like, "No, we don't have a framework. You are free to start your business, and then we will figure it out." So we started the business like that without a framework for regulation. But of course, we were always in touch with the Financial Intelligence Center and the FinServ and the SARB, which is the Reserve Bank of South Africa, and the FSCA, Financial Conduct. No, I forget the FSCA. FSCA full form is FSCA is one of the regulators here. So we have had communication with them on a regular basis. They have come up with sandbox regulation where we were able to provide comments for a draft set of regulations they had put together. So there was no real framework per se, but there were many attempts from the regulators to talk to the industry and the industry to talk. So it was much more favorable than what it was in India for sure, because I was in India during the time that all of these things happened, and the regulators won't even give you a meeting to talk to them about. But so and now 7 years later, we have a licensing framework, and we are a licensed and regulated crypto service provider in South Africa. And I don't think any country in Africa actually has a licensing framework as of yet. So South Africa is in that sense well balanced, well regulated, and welcoming country to do business in.
if you talk about the transaction patterns, like you just like switch gears and move into like the next part of the conversation. If you talk about the transaction patterns on Valor, the exchange, primarily from the 80% retail base, right? One interesting stat I came across was that the top like crypto that is held in African exchanges is stable coins. It's not Bitcoin, it's not meme coins, it's stable coins, right? Which is ironic because we talk about the volatility and the possibility of gains and profit. You don't really make profit on stable coins, right? So I was just curious to hear from you, like, because in India, I think when the WazirX hack happened, the top coin held on exchanges was Shiba Inu, which is a dog coin, a meme coin. It's a bit different. So I just wanted to hear your perspective on what are the regular transaction patterns, what is the average user doing, and why are they all holding stable coins on a crypto exchange?
Yeah, just to add on to that, 90, probably 90+% of stablecoin is US dollar based, right? So there are stable coins that are pegged to the euro. There are also a couple of stable coins locally that are pegged to the rand here. But a lot of the trading that happens across the crypto industry is based on the two of the biggest stable coins that are pegged to the US dollar, which is USDT and USDC. USDC seem to be more, I mean, well regulated in a sense from a US point of view, because it's Circle, which is the issuer of the stablecoin, is regulated in the US, and they also got a license in France. But their USDT, which is operated by Tether, seem to run into issues with the regulations, and they seem to be currently being offboarded as a stablecoin in the European region, based on some new regulations to comply with the MiCA regulations in Europe. So maybe in that sense, maybe USDT is falling out of favor, but we're still seeing USDT be the king of stable coins, because they have been the oldest player in the stablecoin issuing space. So now coming to the usage pattern in the African continent, we have this inherent issue with destabilizing local currency, right? So it's not one country in Africa, but a lot of the countries face this, and many don't, but there are a lot of them do. One stark example of that is Zimbabwe, right? So Zimbabwe had runaway inflation. So Zimbabwe dollar was worth nothing within a period of 9 months. So that you can attribute it to mismanagement of funds, misgovernance from the government, etc., etc. There are lots of reasons for why governance fails and your national currency loses its value. So then, what do the people do, right? So how do we get out of that? So you've lost trust in the local currency. What do you do? So then you go to the next best, which is the world reserve currency, which is US dollars. And even to this day in Zimbabwe, US dollar is a accepted legal tender. So you go to Zimbabwe with US dollars, and then you can exchange it for goods and services. So that's the extreme example in the African continent. But there are a lot of the countries in the region. People want some form of store of value for their hard-earned money that is not dependent on their own national currency holding value over a long period of time. So they're hedging. So of course you need the local currency to live, right? But at the same time, if you have an extra income that you want to save, you have many different options, and one of the options is put it in a dollar-backed stable coin, so which is considered a cryptocurrency, even though it's like $1 to $1, it's a crypto asset, right? So when you do have this stable coin that's US dollar backed and it's 1 to 1, and you have disposable income, why not, right? So it's the next best thing to holding the local currency. And that I think is not just in South Africa, but across Africa, there is definitely a tendency to get exposure to world reserve asset, which is US dollars.
You know what this reminds, this one bit is typically we've seen how the UAE essentially tends to benefit when whichever economy is going through a war or a bad time, everyone who's wealthy from that economy would just want to move their money into the UAE and be like, I'll probably buy some real estate, put it out on rent, make it an Airbnb, but at least I'm insulated from all the political and economic risk that's happening in my economy. So what I'm hearing is the crypto or the blockchain ecosystem is very similar, which is why it's possibly a lot more prevalent in Africa, where whoever feels unsafe has built a little bit of wealth. This is one way for them to just safeguard it. Is that correct? Where the payment is in the form of the volatility.
Yeah, I think, like I said, you have a few options, and one of them is this. So it's a low barrier to entry. Of course, you can use a regulated entity like ourselves to get exposure to that. And you're absolutely right. So it's hedging against political instability.
So there's a few interesting things here. I think the first one is you mentioned lowered barrier to entry on if they want to hold dollars with Valor, I assume they need to download an app on the App Store or Play Store, something everyone's very familiar with, make an account with phone or email, do some basic KYC that you require, and with as little as, I don't know, 100 Rand or 50 Rand, they can just go in and start buying USD, right? Versus going to your bank, yeah, USDT, USDC, whichever stablecoin they choose, versus going to a bank where you probably have to go to the branch, get some forms, answer to a manager for what purpose you're buying dollars. There'll be a cap on how many dollars you can hold. There'll be a fee associated with the account. There'll be a minimum threshold. There won't be any interest, most likely. Withdrawals will be slow. So there's all of these issues. It's actually interesting again, right? It's like Valor, the crypto company, or Valor, the crypto finance companies, almost offering a savings account like service in this regard. But the other thing I found interesting was that I was under the assumption that a lot of the stablecoin deposits on exchanges were inward remittances that relatives from Europe or the US or some of these other markets were sending back home. And it was just cheaper for them. If you're in Europe, you have access to a Coinbase account or some account there, maybe even a Valor account there. And you just open up there, you go easily from euros into stables, send the money back home to the Valor account, and then they off ramp. Do you see any of that, or is it mostly people taking their income here and just holding stables for savings and hedge and things like that?
I think there's a definitely uh, drive towards using stablecoins for payments, cross-border remittances, right? So it's not just individuals, like the use case is definitely that you just highlighted, definitely the case. But if you take it further, it is both ways. Businesses who are doing business locally but want to get paid internationally. Like, let's say Netflix has lots of subscribers in South Africa, so you're collecting all the payments in rand, right? But they don't want rand. I mean, they want dollars, right? So how do you collect all of this and then send it across as dollars? Yes, if you can go through traditional means, but also you could use stable coins. So for faster, cheaper, and even more real-time settlements, right? So there are players who do that, and at the same time, remittance, like inward businesses that are doing remittances inward, also using stablecoin infrastructure to move money, and then have local exchanges in all of these places to allow easy cross-border payments, which is far more frictionless. In fact, in terms of pricing, it's really the opposite of what you see in the banks, because there is definitely a little bit of a premium, for example, in South Africa and many developing nations, where if you bring in crypto assets and you are selling those assets locally, you're actually making a little bit of premium. Maybe 0.5%, 1%, 2%, depending on the day, you're actually making a little bit of premium. So instead of actually losing the value of your inward remittance, you're actually gaining value of your remittance. So stablecoin as an infrastructure, businesses are exploiting that and providing their services of remittances as well as collection locally and settlement internationally, for cheaper, faster, more frictionless cross-border payments. And it's amazing. And I personally believe that that is the best use case that crypto has shown the world. Like like I personally believe that in the future we'll all be one country, and we are all citizens of this one world. And if in order to do that, you also need a frictionless form of information exchange, which we already have with internet, frictionless form of a financial value exchange, which to me is crypto, right? So crypto has shown us the glimpse of what is possible to provide this frictionless cross-border payments ecosystem.
Are you able to share if you're currently working on anything on remittance or something like the Netflix use case you explained? Is there anything on the institution side that you're exploring or working on that you can share publicly right now?
We are definitely looking into it, and hopefully we'll get something out. Yeah.
Nice.
Oh, so
Awesome.
what I'm hearing is like today in India, when you need to subscribe to an OTT, you're kind of in your bedroom, you put it on your TV, and then they'll say take a subscription. You just open your UPI app, you scan the QR code, you pay, and you're good to go. So you are saying that there are places right now in the world where Netflix subscription possibly is also being paid through using cryptocurrency. Is that happening, or you think that, I mean, companies like OTT platforms in the next couple of years would be open to that?
Well, it's already happening. It's already happening. It's to just to clarify my example, it's like if there's an OTT platform locally, Sarthak, you will still be paying Indian rupees, right? But there will be a business who is collecting all of that Indian rupees and then using stablecoin infrastructure to settle the international party, which in this case may be Netflix or something else. So they get dollars because their earnings are in dollars. They're not in Indian rupees. They don't care about Indian rupees. They care about how much money they can get in dollars. And that facilitation, there are lots of businesses doing that already. And currently they might be doing it through traditional means, but soon we are seeing many of these companies are resorting to crypto because it's far cheaper to do it.
So almost like a B2B settlement between like Netflix India and Netflix US or Netflix Ireland or wherever they want to. Okay. Cool. We'll move on to the next bit, which is around self custody versus security and compliance, right? So the original ethos of crypto, the Bitcoin white paper, and I think what a lot of the audience also might associate crypto with is this idea of decentralization, down with the institutions, and everyone owns their own money, and all of this stuff, right? Which is that there's like you have your keys and you have your coins, right? So like this, where you can custody your own money, no third party. Obviously, that's very hard to use. That's not how most of crypto is used today. And that comes with other challenges. Like if you lose your keys, you don't get your money back from anywhere, right? And then there's exchanges like Coinbase, like Valr, which are sort of helping. You have an amazing user experience. You've onboarded millions of users. You're doing volume, but the trade-off is that you custody the crypto on their behalf, right? So Valor, the exchange, holds the crypto, not the local South African user. And of course, the sort of promise from you is they can withdraw it as and when, right? So and then of course there are cases where this has gone horribly bad, like FTX most famously. More recently, you had WazirX in India. Bitget had a hack as well. So how do you think about this trade-off between the user experience? Also, of course, institutions like Valor can do KYC, you can do AML, you can comply with whatever the local regulator comes up with. So you have that on one end, and you have the ethos of self custody, where people may want to withdraw their money from Valor into a self custodial wallet. So how do you think about that trade off and that journey, and the like where's the use case for what? Right? It's like it's not a one size fits all, but like I'm just curious, how do you think about those trade offs while designing Valor?
Yes, true. I mean, this clash of ideology is a common thing that happens when you have a new wave of technological evolution, right? So, and innovation. So, for example, at the time of internet in the 90s, um, when internet was a thing, there was email and things like that. I think the many countries banned the internet, because how can you start exchanging information with people who are not outside your region or something like that? And then there was also a drive, even in the US, to ban e-commerce, right? Because how can you buy stuff on the internet? Like, you don't know where they are, and they don't have a brick and mortar store. You can't walk in, and you can't see the person face to face. How am I going to like authenticate? I will get scammed. So lots of so there was definitely a drive to ban e-commerce. Imagine if that had happened, right? We live and breathe e-commerce on every single day in all parts of the world. India especially, I love coming to India and just opening up my Swiggy app, or just ordering whatever I want delivered in 10 minutes, right? So I think e-commerce has really transformed how we shop. But it was not without its challenges. Lots of people got scammed, right? Lost their money during the initial phase. So there was a lot of figuring out this new technology. How is this going to serve us? And similarly, even with crypto being a completely new technology, a lot of the people are, I would still say, early adopters, right? So I don't know if you know the crossing the chasm thing. So the early adopters, they are technically savvy, they understand, they know how to deal with a crypto wallet, they can like get the seed phrase, store it properly, and all of those things. But there's also the mass adoption that has yet to come, and it's coming. In order for mass adoption to happen, there needs to be something. And then I think for me personally, it's the user experience, right? So how do we make sure the experience is friendly, intuitive, and still educating the users on the challenges of crypto custody, and at the same time allowing them to make the choice, like based on this experience, whether I want to self custody or I want to retain custody with a third party. But I don't know if I can see a future where everyone will be self custodying their own assets, because I think there will still be, maybe a 90-year-old grandmother wants to get exposure to crypto. I don't see her getting seed phrases and etching into a steel wallet and putting it into a fire safe custody, a safe or something. So there will still be people who want to just click on forgot password and get access back to it. So, and usually when you're designing products, security and user experience are usually at odds. So if you want to make it very secure, user experience takes a hit. If you want to be super simple, security takes a hit. So it is definitely a balance. So we basically consider Valr a security first company, because we are actually securing people's money, and we want to make sure that everything that we build is safe and secure, and follows the world best in class practices when it comes to securing funds. But at the same time, we do multiple iterations on that. So to make sure that the experience is as simple as possible for the user to understand the risks involved, and get to what they want to do as soon as possible. So I think it's the same thing, like in terms of self custody. I still believe if you can educate yourself and do it. If you can't, use a platform that you have vetted and you trust, and and has the track record of safeguarding people's funds in the best way possible.
Got it. Okay. Awesome. All right. We'll switch to Valr, the company now for a moment, right? Because there's a lot of interesting things around Valr, the company, right? The first one is that you and your co-founders are working together in the blockchain division of a bank, and you all sort of branched out to start. You're blessed by the CEO at the time. You also have a team now over 8 years. Most of the team has remained and has worked with Valr. Very, very low attrition from what I understand. That's unheard of in tech. The median retention for Amazon or any of these big companies is 2 years. But it's even more unheard of in crypto, where you have so much volatility in like the market. People lose faith and conviction pretty fast. So Could you talk a bit to, like what's the team and the culture that you built at Valor that has let you build a successful product, no doubt, but also build a successful team that has stayed with you through what was a very volatile 7 years, right?
First of all, many businesses which have more than one founder uh, get into the issue of disputes within the founding team, right? So that is one of the blessings, divine intervention, you can call it maybe, and and uh, um, and I'm completely blessed to have co-founders who we share the common ideology of two things. Like I said, we always want to do what is right, and we always want to be of service to people with Valor. So we want Valor to be a conduit for serving as many people in the world. Right now, we are 80%, maybe 70 to 80% of the people reside in South Africa, but hopefully that'll change. And so we want to serve as many people in the world with a technology that we believe is transformative. So that kind of vision, and having people who not only share your vision but also share your values has been the key to maintaining a level of unity, not just in the founding team but also across the board. And we also, from a leadership point of view, like we also are not very dictatorial. We want to give everybody a voice and a platform. So obviously we are going to be doing it respectfully, but disagreement is part of building something great. Because there's a quotation that comes to mind, like with the clash of differing opinions, the spark of truth shines. So we want to always create that environment of openness and no set hierarchy to say, oh, I have to defer to this person in a meeting, or I have to defer to this person because this person has said this to do this or decide this, right? So I think that is the kind of openness environment that we have created, and thankfully we have been able to permeate this kind of freedom of thought, not just in the founding team, but across the board. We have about 110 people in the company now, and I believe that this kind of open, no hierarchical culture is still the case, even though we are more 100 plus people. And then I think the other thing is also a sense of ownership, right? So, and from the very beginning, we also were of the opinion that even though we are the founders, we want to share this ownership with whoever comes into the team. So we had this ESOP program from the very beginning. So like from senior engineers to support team, we have been providing ESOPs to our employees so that they can also feel a sense of ownership, so that they're building something together and they're also owners of something. I mean, lately it has changed because now that we have more than 100 people, the policy has changed a little bit. But from 2018 and up until recently, we've always provided some form of ESOP program for new employees. So the other thing that I wanted to also add is that the best people want to always work with other people who are the best in the field, and we've always said we have to hire slowly. Even though we had, like, initially we had raised $1.5 million in seed funding, for the longest time we were only 9 people, right? So we had the best mobile app developer, the best backend developer, best front-end developer for the website. So it was easy to build with the best people, and we kind of, like, even when we went through the process of hiring, we would take our time to hire, and sometimes we even give them a 1-month contract or a 3-month contract to figure out how these people would work with us. And some of our best hires have been contractors who came in for a month, and and have had many positions in the company over the 7 year period. and gone to leadership positions within the company, right? So I think so. Try to hire the best people who also align with your values, and give them the freedom, and then create a flat and open structure, and in all cases maintain unity no matter what. I think that is the key to creating a culture that you can build a business that stays for long time.
Do you think there's a natural limit to the size of an organization you can do this with? Like as you've now gotten to a little over 100, and as you look to scale, globally and with more verticals, do you see a challenge there as you add more people on?
Yeah, definitely. I think we like it, not just when we reached 100. At the time when we reached about 40 to 50, I think we needed to put some structure in place because not everybody can work on everything. So we had teams that are stream aligned, the teams that are aligned to a particular domain, and then we hired a VP of engineering. I think then. So I think there are a few things that we can put in place, but we didn't go from zero to hero. I mean, it was an organic uh, building of a structure that makes sense for us to build what we want to build at the pace that we want to build in. So it's a learning process. We didn't follow like by the book. I mean, of course, we have experts who know how to do kinds of things, but we're not like, okay, this is what the book says. Let's implement it. We roll our own to suit our needs and our culture.
We'll switch now to your own personal journey, right? Because, like I said at the start, you're from Bangalore, from this college called RVCE that many of our listeners might know of. And you've ended up as co-founder of South Africa's largest crypto exchange. So something happened in between, right? Uh, and I would just love for you to talk about a little bit. The most interesting thing to me when I was looking this up was that you said at some point you tasted success with Yahoo, which was your first real job, your first real income, and you felt like you wanted to sidestep that, explore a little bit, and then chart a new path instead of going up that ladder. I think that's a pretty interesting way to think about it. Not many people have the desire or even the courage to do that. So I just wanted to know about your journey from here to there, and how you made those choices, what those key forks were where you made those choices.
Yeah, well, I think just looking back, I was definitely a nerd growing up, acing all my classes. Um, so I don't know if you guys are aware. Maybe things have changed a bit in India. In Back in the day, there was something called this Common Entrance Test (CET) in Karnataka, and then I ranked 88 in that exam, and and I had the choice of choosing any engineering college, including the NIT Karnataka, which is actually ranked higher than many of the IITs that have come up since. But my parents were like, "No, you go to RV college because it's close to our house. You can stay with us." So I went to RV. But RV is a very competitive university, brilliant minds. I think most of the people who I worked with are no longer in India. They're probably all of them in the Bay Area. Uh, but right after the last day of college, I reported to work at Yahoo because I had campus placement a few months before. So it was exciting time because at the time there were only about 10 or 20 people in the Bangalore office in Yahoo. I was working directly with some of the engineers in the US and learned quite a bit. And it was quite comfortable. At that time, uh, earning a salary from Yahoo was was one of the highest you can get as an early graduate. So it was good. It was a good 4 years of learning and working with lots of brilliant minds. But at the same time, it was also getting to a stage where, I had to do something else, right? And so I always also had this desire to start a business, start something. But in order to start something, I've so far figured out that you need the right kind of people around you, right? So I mean, you have lots of ideas come and go, but if you don't have the right kind of people to work together with, like I said, like values and ethics and things like that, and expertise, skills, then you can't really. So I actually left Yahoo, went to Macau, and was a teacher for a year. I was teaching young students, primary school, high school students, math and computers and programming and Visual Basic, lots of fun stuff. Um, but also, after a year, I kind of figured I think it's time for me to move on from Macau. Although I really enjoyed my time.
How did you pick Macau? Sorry, like what prompted you to pick Macau and go to Macau?
Oh yeah, because I had a friend that I had made many years before, and we had lost touch. But out of the blue, he emailed me saying, "Hey, I have a position. I'm one of the directors of this school. I have a position. Do you want to consider this?" And I was like, maybe. And then I started talking to him. And I said, "Yes, I want to do it." My parents were like, "What are you doing? You leaving Yahoo and going becoming a teacher?" you know, I think, and later on they were really supportive. So I went and did that. But I really wanted to get back into tech after a year, and that's when I actually offered my time as a volunteer in Israel. So I don't know if Aditya, I mentioned in one of the conference that I spoke at. I'm a follower of the Baha'i faith, and there's actually a lotus temple in Delhi, right? So that's a Baha'i temple, and I grew up in a family that followed the Baha'i principles of service and unity, and you have to treat everyone equally, and the world is one country and mankind is citizens, and so that kind of mentality. And the headquarters of the Baha'i faith is actually in Israel. So I volunteered my time and skill for about 3 years to go and serve as a volunteer there. So we were building. I was actually part of a team of software developers building some line of business applications for the administration of the faith, and that's where I met my wife. So my wife had come from South Africa to serve also as a volunteer there, and there are a lot of youngsters there. Spending time in the spiritual and administrative center of the Baha'i faith, and you get to know each other, and so I think that's when I we decided to get married. And once our service came to an end, we had the opportunity to leave Israel and figure out where to go. We could go to India, or we could have gone to the U.S., or we could have come to South Africa. So those were our three options, um, and like for whatever reason, we decided South Africa is our next destination, and it's been 13 or 14 years since we moved here. So that is how I ended up in South Africa. So you could call it for love.
That's awesome.
It's the nerds who have the best love stories I've seen.
There you go.
Yeah.
All right. Okay. I think we're almost at closing. I guess the final section is is there a way for people in the audience to get involved? So, do you have roles that you're hiring for that are remote or that might be interesting in general? Do you plan to come back to India? Is that on the cards, or how would you suggest people reach out to you or get involved if they're inspired by the story and by everything you're doing at Valor?
Yeah, absolutely. Yes, we are always hiring, looking for the best people to come and work with other best people within the company. We are always on the lookout for very good engineers, so back end, front end, infrastructure. We actually have a lot of people from India working with us. I mean, we're a completely remote company. Um, so we are spread across. We have people in the US, in the UK, in Europe, in Asia, in Malaysia, in Hong Kong, in South Africa, and so 110 people spread across the world. So we are looking for the best talent wherever you are. Engineering. We also have some openings in compliance. We, as and when the regulations are coming in, and then we have more workload to do some of the compliance and regulatory stuff. We're hiring compliance staff. We're also looking for designers, UI, UX designer, product designers. So if you are interested, you can go to careers.valor.com and look for the positions that you're interested in, apply, and then we'll go through the process. We are always hiring, and we are always looking for the best people.
Awesome. Thanks. We'll link to that in the description as well so people can find it. One final question. I don't want to put you on the spot, but do you have an elevator pitch for the regulators in India? Like if you had one thing you could tell them, what would you tell them?
Yeah, for sure, I do. I do. Um, you know, regulators have a lot of power, and with great power, you all know what comes next, right? With great power comes great responsibility. And when you are looking at the asset class that is crypto, as regulators, I would urge them to look at it from an how do you create a well-balanced crypto ecosystem that serves customers, that protects customers, and as well as fosters innovation. I think that should be the primary objective of a regulator here, rather than thinking about how do we stifle this industry. Let's see how we can provide the ecosystem and the environment for them to thrive, because when they thrive, the whole country also thrives.
Right. Awesome. I think that's a great note to end on. Thank you so much, buddy. This was a great chat. Really, really enjoyed it. Hopefully, people find it useful as well.
Thanks
Thank you,
so much.
buddy.
Thank you so much for having me. It was also a wonderful conversation, and I enjoyed it myself.